Hello folks, today we are very honored to have Mr. Kelvin Han, founder of Tradewitheboys, to be with us today to share much advanced insights since he's been in the trading industry for like 22, 23 years already, right? I believe that you started off by being a trader.
Yes, right, exactly.
Yes, okay. So maybe that you can share with us a little bit more of how we can be sustainable in trading, right?
Okay.
And also what makes you really establish Trade with the Boys. And yeah, there's this interesting thing is like Trade with the Boys. Who are the boys? Like yeah, correct. So perhaps Kevin, you can share with us our trading community, being little giants in the industry also. Yeah, what makes you continue to progress from being a trader and to even setting up an academy?
Okay, first of all, there's a lot of things that you just mentioned. Oh, hi, this is Kelvin here. Okay, I'm in the market for 23 years to be precise. So what actually happened was that like all money crazy guy, we want to make money from the easiest way. And of course, trading was one of the things that captivated me. Undeniable, I started at the worst way a trader can start is that I lose my money almost within 2 to 3 single trades. And what actually happened was that prior to that, I actually did a lot of homework and I prepared myself. But the thing is this, when I was just only a mere 19-year-old, when I was facing the market, right, I was being, I would put that way, influenced by the most experienced guy in the office. So this guy got more than 20 years experience and he told me that he know what to do. So I put away all whatever I know and I started to follow him. And within 2 to 3 trades, I actually burned my account.
Oh dear.
Yeah, so this is the worst time and the worst way to start, and probably that will be the best thing to tell me that maybe I'm not cut out for trading, right? But what actually propelled me further was that because of the incident, I noticed that experience is not going to bring you to places. I would like to use this word itself that Warren Buffett quoted. Or maybe some other people quoted, I guess, just think out loud. If hardworking can become rich, then a lot of these workers outside, the blue collars, will be very rich today. Now, by saying this itself, right, it's not to belittle the blue collars, but this is my point. You cannot really just use whatever that's available in the market, like what you just mentioned about why I actually use my own indicator to find the big boys. Because we can ask ourselves a question, since 1987, 97, 07 to even 18, you notice that the financial crisis comes in a very repertoire method. And why? It's because the boys literally control it. So if you believe that the boys actually control the world, in a way, then you just need to find where are they. Right, there's a lot of methodology will say that you can look at other ways of trading, but if those ways were usable, then seriously there should be a lot of people making a lot of money from the market. Now I cannot say that I make a lot of money, but I'm in the market long enough. I've coached more than 17,000 students in my life, so I realized that the failure of traders are repeating the same. It's always the same thing that causes traders to lose money.
And which is?
Well, I think the biggest thing and everything is all about risk management.
Alright.
Okay, I myself have fallen into this area several times in my life. I'm not going to lie about this. Now, risk management, when we tell people what is that, they say, oh, okay, trade within your means and stuff. It doesn't make sense. To me, it's not right. Risk management means that, first of all, when everybody thinks that the world is going to crash and the price is not going down, that is where, in terms of risk management, you buy over there. So what happened? You buy there with the expectation to lose. Yes, expectation to lose. So that if it doesn't lose, you're bound to make, right?
Yeah.
Okay, so what happened is this. Many times you can see it from many other school of thoughts. They tell you that, okay, you forecast how much would you make versus your risk. But a lot of them, they emphasize on what they can make. But I emphasize on what you can lose.
True.
Okay. Yeah, so if I focus on what we can lose, that means if I lose or I lost the money, I won't feel so bad. Now, most of the time, as you mentioned, right, people actually lose money because they didn't prepare to lose. Which means that when they trade the market, they already set how much can they make. So when the price go reverse, they will like a sudden freak out mode. They say that, hey, what should I do now? Am I wrong? Am I this? Am I that? They begin to ask questions. And of course, the worst thing is to ask people around them and say, what's your view? What do you think? And I find it very silly because you are the trader, you make that decision to trade, and now you're asking people for help. Yes. So that's why if you look at trading, if you really want to trade for a living, then you must ask yourself one question. Why stop loss get triggered most of the time? Right? A lot of people have been asking me, Kel, how come my stop loss every time gets triggered? How come every time I put a stop loss there, it will trigger me, and for some reason it will reverse towards my original position again? It's as if that someone, a big brother, is watching you from the back. I don't buy that, because to me it's right. This same thing that I hear, I heard it countless times, and I don't think that any big boys will aim any individual of different country at the same time. Then what will be the problem here? I'm going to be very upfront on camera today. Is that, or candid, I'll put it this way, is because the boys has structured how you enter. The boys know where's your stop loss. They don't need to tap onto your trade or see the broker behind the scene. They just need to know how I taught you to stop loss. And you notice that all of us will put the same stop loss at the same place, and even though it's from different country. So it's no brainer. If I am the boys, I know that you put a stop loss at this particular junction, right? What will I do? Right, well, I'll bring the price down, and when the price came down, what will you do naturally? You will short the market. And because you put a stop loss there, I just have to go against you at this point and push the price up, and I keep on doing it every single day, and that's how it works. That's the reason why you notice that you ask everybody in 1987 when Wall Street crashed itself, right? You ask people what happened, they say price came down. You ask them, you buy? They say they didn't buy. Then 10 years down the road itself, right? Before 1997 crisis, again, everybody jumped into the market at a high price and got flushed down to the low. In 2007, it happened again. So you notice that although every time the crisis is different, but the way it's moving in pattern is repeating. So trade with the boys, right, simply put, is that I'm not going to care how overbought or how oversold is this market right now. I don't care about the PE ratio, I don't care about the NTA value, I don't care about really the potential earnings. I care about is the patterns. So I structured this syllabus based on repeated patterns, and there's one key point, as you mentioned, is to follow the boys. The boys go up, I just follow up. The boys go down, I go down. So of course, must be in your mind is that then how can we get this information? Or that's what people are paying me for.
Yeah, that's what I was about to ask. Where do you get the source of like where the boys is heading, right? And
Yes.
but usually, just my percentage is quite accurate in following the boys from your sources that in your system. Yeah.
Now I've been asked several times people want to buy my thing. I ask them this. No, I do not get the data from SEC. I don't get the data from Cymex, Comex, NYMEX. No, because first of all, they don't give it to you. Second of all, itself, right, the whole financial market made up of 3 to 4 entities, retail aside. Okay, now the mutual funds and the unit trust, they will have to produce their so-called transaction, but they got about 2 weeks before they can really tell you. So Warren Buffett can buy a stock 2 weeks later, then tell the whole world. By the time he already bought it, correct? Now put them aside. Hedge funds and dark pool. These two they won't tell you because by legal they are not needed to tell you what they are doing. So if that's the case itself, right, how can you know the numbers? So whatever numbers that's in the market that say they will tell you how the big boys are trading itself, right, I will just smile because you can see that every time, like recently itself, when the put options is at the highest level, and where the media tell you say, okay, so many people buy put, so the market should crash, right? But what happened to the market? The market went up. And when the call options are at the highest point where everybody buy calls, it's expected to go higher, the market sold off. So what I'm trying to say is this: if these numbers are able to factor in for trading, then seriously, it won't be that difficult to trade. Okay, for buying itself, like I say, I'm not saying my system is good. But because I have traded for so many years, I have the fortunate experience to talk to traders, many of them, and I noticed that when an individual lose money, all right, they always repeat the same thing. So what I did was I interviewed more than 300 over traders over the period of time. and I note them, like a dot plot chart them and see where they usually make the mistake on the charts. And then from there itself, I reverse engineered, and I realized that the way they do is the same. So my poor programmer has to accept what I tell him. I'll write him a lot of garbage, a lot of drawings, and say, look, I don't care how you do it. You go and patternize it and create an indicator for me.
Okay.
Yes. So it's actually a collection of more than probably 200 to 300 different patterns thrown to a poor programmer who has to find a way to create into an indicator for me. And of course, every 3 months or 6 months, I have to revise it, audit it, and see whether it is still in line.
Right.
But fortunately, things are still going fine until today. So that's why my students are still coming in. But I cannot deny that because the way of using this sort of data, I'll put it this way, is so unorthodox, right? So a lot of people find it very difficult to accept.
Oh.
And I'm not that keen to tell the whole world what I've been doing also. So
sure,
it's good.
No problem. This is your IP.
Yes, exactly.
Just curious, like 200, 300 patterns.
Yes.
Right, where your programmer is going to, so you will gradually filter down to this indicator. But usually commercial indicators out there are pretty lacking. So
exactly.
Yours is like follow the boys. So meaning how close do we follow the boys with your system?
Okay, like I say, it's a good question. Now, like I say, a lot of indicators will tell you that, okay, the boys are buying or selling through some ways and some method, but mine is not. Mine is basically like algorithm that tracks the movements of the price action. And then, let me give you an example. Let's say I got 300 patterns, okay? And these 300 patterns now will have to come in simultaneously to trace the market. And whichever, let's say maybe some methods is actually meant for buy, some methods meant for sell. So what the system behind the scene is, that there's a server at the back, is balancing now in the next 2-3 minutes more towards a buy side or more towards a sell side. And then you will finalize with a color and then reflect it as an indicator. So if my indicator turns to red, that means that based on the checking through at a very fast speed, is leading to the sell side. Now if it's vice versa. So I would say that my indicator what they call track the boys.